Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, August 16th. It is a little after 11 o'clock Eastern Time. Just wanted to do an update midday, sort of a follow-up to the post I put out this morning. What we're looking at here is the market kind of now caught in a sideways trading range. I figured we would have broke down from that range, broke those lows, give me that final check mark I've been looking for. I'm referring to the lows from Monday, August 5th, but we haven't. In fact, we've tested them 3 times. That I don't like to see. It's not the end of the world for the bearish scenario, but 3 successful tests so far. Usually you hit it once, maybe the second one, then you go down there. Again, until we get that check mark, we don't have the sell signal, and it helps the bullish case when you test 3 times, especially after these two are in close proximity bounce. But it's certainly not over. Let me make it very clear. It is just that's the big level on SPY. 282 is the level right there, roughly. And you have just this boxed range. The same highs I was looking for back when we first hit it for the very first time back here. My first bounce target, uppermost bounce targets right there. And you can see it. Look at all those candles. 1, 2, almost that third there, 3. So that's the story of SPY. Let's just not try to make it any more complicated than that. And again, what I've been saying is, we need to get a check mark for the bearish case and open the door to the next wave of selling, which I think will be impulsive if and when it comes. I'm still leaning that way. Like I said, when if you can read from my tone, do I like the fact we've had third test successfully so far, and we've consolidated this far? Usually you get that little period of consolidation, the next move down, especially after the initial drop. That's more typical. You look back into the first leg down off the highs in October 2018. You had a typical counter trend rally, kind of flaggish type action, then you dropped. You had a quick up here. This is an ideal scenario for the a correction here. Not crazy about this consolidation, but with that being said, it is what it is. There's nothing at this point in time compelling enough for me to change my trading plan on any of my swing positions or where I think things are going. And again, patience pays, or it may not pay, but it pays to at least sit tight and wait for that final check mark to open the door for the next wave down, in other words, or to add, to go to a full short position. And of course, if we break above the highs, then that would be a check mark for the bulls and a big, let's just say, or a big X for the bearish case. So right now, we're exactly in the middle. In fact, if you look at this chart, look at these candles. Look at the top of these. 1, 2, 3. Catches the bottom of that fourth and fifth candle, the top, and I'm looking at the bodies, the fat parts. In fact, almost every candle has had a reaction. So there's a very good level, and I'll add it right now. There it is, that midpoint of that box, that trading range here. Let's color code it like this. So let's say for the markets, we'll say this should be green. We'll make that 293.80. Green, bulls want to see that broken. Red would be a break of 282, and again, we're right back in the middle. And the middle of that range has been was back here. Resistance was support over here. We broke it once again, so therefore we should be at resistance, and that's why I want to do this video. We are at resistance. Let me make that clear. All right, so let's look at QQQ. Same story. Let me go to a different board here and a little clearer. Same exact story in QQQ. Obviously, they're gonna move closely together. There's your recent trading range, and we're about in the middle of it. You can see although on QQQ we popped up above the midpoint today. And again, so do I like that? No, I don't like that at all. The fact we were below it, now we're back above it, and we're back above the trend line. Not crazy about it, but again, not enough to modify anything on my swing trades right now, or my intermediate term outlook. We just need to clear this range, and then when you take a look at the 60-minute charts, you can see that we've regained this trend line. And let me do something else for those that aren't visual. Just try to illustrate what happens when you get stuck in a trading range. I'll make this a line chart. And so, as impressive as today's rally is, 1.64%, it's par for the course, and I've said that many times. And the only way you can swing trade a market like this successfully, if you're if you're feeling pain on shorts today, is to keep your sizes small enough, because this rip here is no bigger. In fact, it's smaller than the last dip down there, last drop there. It's just, and this, it's the nature of this trend. So again, when you put it on a line chart, you can see, because you don't have all the gaps. And this is a what we call a sloppy sideways trading range, and it's a big trading range because the VIX has expanded. The VIX broke out recently. We have a buy signal on the VIX, sell signals on the market. I still think it resolves this way. But this is what I try to say. You get chopped to pieces. Now again, I didn't think we'd last this long in the range, but again, I knew that we wouldn't go down either until we took out those lows. That's still the important level, the lows from August 5th on Monday. All right, let me put that back to a candlestick chart, and right here. And now let's look at some levels on the here on the 60-minute chart. This will be interesting. I can visualize. I can see this trend line. Remember, I had this downtrend line right here. We broke above with that. When the Washington tried to gun the markets there, and did with their release on the positive trade war thing, faded again the next day. But watch this. Take that trend line, create a parallel line, and all that gives us that so far. That stop price is cold. So what I did is I added it to that previous reaction. So you have this price channel. In fact, I can see if I create another parallel trend line, it comes in right around the bottom of this channel. So this is kind of the things we're working down. This is resistance. So when I'm doing this video, I can tell you this is an objective shorting area, because I have pretty good resistance. Here's that big old gap from the other day, and a big old gap right here. So you have the top of this gap, or at least the candles around it, and then the bottom of this gap. There's another gap right there. This is called, we'll call this Gap City right now, right around, I have it, you zoom in on the lines, 185.95 up to about 186.25. So I can't promise it holds, but I can say this is technical analysis. I suspect it will. I think this is an objective time to short. Add short, again, active trader. If you already have your max, the amount of a position that you want to have at this point unless this breaks. In other words, maybe you were scaling, you took some shorts here, you've added some back on a bounce back, like I did, covered my shorts there, and then recycled in from this point a couple weeks ago from the bottom of the gap all the way up to my max bounce target zone. And that's my, core short holdings right now, which, I'll add to if and only if, we take out those lows down there at this point. But active trading, I have an active trading account too, in addition to the all the other things I'm swing trading these shorts in, like IRAs and other accounts. And on that looks like an objective level to short. And when you say objective, because you're shorting at resistance, so you have the top of that resistance zone there at 186.25 plus this downtrend line, which now has enough reactions to help validate it. So that's it. So you have your stop somewhat above that, because if they pop it, and other than a brief pop, you want to see ideally a 60-minute close, big green candle, impulsive buying, and if so, that would open the door for a rally up there to the next backfill of this gap. In other words, that would be the logical target. Otherwise, resistance is resistance until unless taken out. So therefore, you can play this however you want to see it. If you're glass half full, if you're a bull, wait for the breakout. Don't jump the gun. Don't go long right at resistance. That's counter to trading. It doesn't make sense. Give yourself just a little bit more. Your entries are slightly less favorable, but your odds are a lot higher that the trade will play out. Or you short here with a stop above and try to go for a fade back down to maybe the top of today's gap. You can see it right there. There's the top of today's gap. Or you just trail it down and see what happens, because that's what this market has been doing. I talked about it, these micro trends lately, up down. You can swing these if you want. All right, so those are levels on QQQ. We'll keep this one quick. Here's SPY. Here's the same trend line right there. Create a parallel trend line, and there it is. We're pretty much up to there. Create another parallel trend line, and that one comes in right around here. So you could probably also do an Andrews pitchfork. Where is that? I've got one here somewhere. You can do the Andrews pitchfork, and it'll kind of give you the same thing there. You can see it's that midpoint of the channel is the trend line I was looking at recently. And then finally, I just wanted to update TLT and CB Treasury Bond Futures. I highlighted recently, was it earlier this week, I believe, this trend line, saying if that trend line breaks, it will probably, first of all, it'll most likely mean a rally in equities. We pulled back in Treasuries. I'm going to show you a gap here. These gaps aren't as significant, but they're worth noting. TLT trades around the clock. By the way, guys, I'm talking fast here. TLT, if you're not familiar, is the 20 to 30-year Treasury Bond Fund ETF. So if you don't trade futures, this would be your vehicle, or TBT, which is this thing turned upside down. TBT is the two-time inverse, or short Treasury. So you could buy TBT or you short TLT, and so these are some potential targets. Now this scenario would entail most likely the markets continuing to break out of those levels, those resistance levels I just showed you, and then taking the next leg up. That would probably lead to something like this, maybe even this. However, for a move all the way down here, that would most likely entail us going back up to the top of those recent trading ranges, my max bounce target zones, or especially if we broke out. Then, because somebody asked me in the trading room today, hey Randy, any thoughts on an official TBT short? I said no. I had just posted right before that that question. This right here, this is the same chart I've been updating recently. Gotta zero that in for you. There we go. This is ZB, the 30-year Treasury Bond Futures. So if you're a futures trader, you can use this one. And I showed you this trend line. We're waiting for and this is another example of learning, or being cognizant of what time frame you're trading. This is a 60-minute chart. So if you look very closely there, we had a little whip below right at about the same time stock futures rallied up to and into resistance. It's not at all a coincidence that ZB was falling today while the stock market was rallying. That what's going on there, it's pulling money out of that flight to safety trade into treasuries. For really two reasons: because stocks are rallying, and the only headline I saw today, because the press will retrofit a headline onto whatever reason they can cite for a rally, it said that recession fears are lowered today, and that's why the market's rallying. And look, even if that's true, that goes hand in hand too, because treasuries will come down, because what happens is bond prices are falling, meaning at the same time the rates on those bonds are rising, and that's forecasting better than expected economic growth. What all this was is recession worries plus a flight to safety bid. Two things caused this: the stock market going down, and along with it, and because of it, it's all interrelated. It's not just mere coincidence. Future growth expectations going down, recession fears. And so if the recession fears dissipate, then you'll see these two go up, the stock market and interest rates, and then bonds go down. So again, it's a somewhat correlated trade, and as I said, you can take this if we get a sell signal. This wasn't a sell signal. You had a little whipsaw, and I even said that in the trading room. I posted this chart saying we're coming up, we're starting to crack now, but you might want to hold off a little bit and just see, because make sure you're not sucked in on a whipsaw signal, because you have equities at resistance now, and these were just starting to crack. So what happened is you did not get a 60-minute close nor an impulsive break, just a little whipsaw momentum fueled overshoot. And that's again why if you want to increase the odds of a breakdown sticking, you wait for either a big red candle intra period or a solid 60-minute close below. Either way, it looks ready to pop. It's a little, I have to tell you, it's a little concerning seeing this clean bearish rising wedge pattern. Let me fix that uppermost trend line. You have the negative divergence in place, which indicates that treasuries are likely about to reverse trend. Remember, the divergences in themselves are not a sell signal. They're merely an indication that a trend reversal is likely. You had negative divergence right here at this high, and you had a correction. Small divergence, small correction. Bigger divergence says bigger correction. These would be my initial and preferred targets right here. Obviously, the highest probability is that one being hit. Again, if you get a breakdown, and then this one, and like I said earlier, probably not come all the way here unless the market really guns up from here. And most importantly, whether this breaks down or not, if the market takes out those lows from August 5th with conviction, and we open the floodgates for the next impulsive leg down like I'm looking for, you don't want to be short treasury bonds. You probably want to be long, although I just don't like chasing them here. They can break that correlation with stocks at times. But the bottom line, the risk reward for being long Treasury bonds here is just it's awful. Let me just say it that way. It's not good at all. And there's also, let me just add one little level here, and then we'll wrap this up for you guys, for you ZB traders. Looks like a little shelf of support here. Looks like we're topping here. So again, you want to make it easy, a break below today's lows in ZB, or that would be the same if you're a TLT trader. You know, I get a lot of times somebody asks me, you know, can you give me the chart for this 3-time leveraged inverse ETF and this and that. There's an infinite number of ways to trade any one vehicle. So if you have just showed you the lows of the day should, quote unquote, should trigger that breakdown or confirm the breakdown in ZB and Treasury bond futures. So likewise, then you would just look for a break of the lows of the day here on TLT, which is the ETF, because that should also do the trick. Although you do have some gap support there just a little below, but that would be, you can see if we zoom in this red candles, there's your low of 188.44. And then conversely, you know, so there's no need to take, you know, mark up 3 different charts. Is you just, if you're trading TBT instead, if that's your proxy, then that would mean a break above the high on TBT, which is 2409, and that should do the trick to break out this bullish falling wedge. And here's your targets. Let's say these are older targets. I think I said ignore those the other day. That would be a likely swing target. Again, these are gaps, but you want to correlate these charts even if you don't trade futures. Go to investing.com, or if you have an account at, say, TD Ameritrade or your broker, and they give you futures quotes, chart ZB, try to replicate those charts, because what you don't see here, you see gaps on TBT and TLT. Those gaps don't exist on futures, because the futures were trading overnight around the clock. So again, they may come into play because during the open market, you know, when the market's open, these are levels worth noting, just as they are in SPY and QQQ. In fact, even more so in SPY and QQQ. So it's worth pointing out the gaps. And again, these are targets I just showed you right there for TBT. If you get that sell signal on the ZB futures, 2470-ish, call it, and 2655-ish or so. Well, you know, I always like to take profits a little shy of the actual resistance level, so that's always a good idea. All right, let's wrap it up here and get this video out to you guys. And again, end of the day, don't forget we're in these sideways grinds right here. And if it's frustrating you, especially if you're feeling, you know, when you see your trades going for or against you, you know, on a big day, if your shorts are down, you're making so much money that you actually feel euphoric, you feel very good, and the next day you're down to the point where you have a knot in your stomach, or you're not sleeping at night, you are over trading. You have too much in your position size, way too much. Take that position size down. The old rule is, old adage on Wall Street is sell to the point at which you can sleep at night. And also recognize your market conditions. This is a low trending market. You might have taken a position of 20-30,000 SPY back here, and you were fine when you were trending. 20-30,000 right now, that same 20-30,000, your gains and losses per day are going to go 2, 3, 4, 5 times or more what they were the daily swings back here. So you need to recognize that. And if you know, saying, well, how do I know that? Well, first of all, you'll know it when you see these big price swings, and if not, just take a look at old Mr. VIX. This is the VIX. This is what the VIX has done. That's a 60-minute chart. This is these spikes in the VIX aren't just random. They correlate with corrections in the stock market. And when the VIX is up, it doesn't just go up one day and then fall back down. Usually there's these extended periods of volatility until the corrections are over. Some are shorter than others, and sometimes you have a period like this, you come down, and then there's another leg up. That's kind of what I'm favoring in the market. This I know I'm drawing all over the place here, but you know, thinking, you know, we're consolidating like this, having this choppiness, and we'll probably get one more spike up. But if I'm wrong, guess what? If the consolidation range in the stock market breaks to the upside, you got it. This one's going down. Volatility will come down, and the VIX will probably fall back to maybe not all the way to the bottom range, maybe, but at least down to the next, you know, support levels here, and ultimately down there to the, you know, somewhere around the bottom of the range. There's some targets on VXX, and since I'm there, before I get asked, TVIX, nothing's changed. I've shared these targets before, and this, you know, same story until and unless the market takes out those August 5th lows, the recent lows. Same thing. If and when that happens, TVIX will most likely break out above the its recent highs and then spark the next rally up to my next target area somewhere around 34, 33 or so, possibly beyond. All right, we'll wrap it up here so I can get it out to you. This has been Randy Finney with Right Side of the Chart. Best of luck on your trades.